Let's chat. Taylor Wilson, Williams Insurance.
Correct.
How are you, my friend?
Not bad. How you doing?
No complaints. The insurance world is nice and calm and steady, and no major forest fires, no major floods, nothing, no landslides.
It's actually a dumpster fire.
A dumpster fire. Okay. It's chaos out there right now.
It's insane.
So tell me what's going on in the market. Tell us how we can. What do we need? What are our pitfalls, or what are our strategies to deal with this?
Well, I'm telling loan officers or mortgage, brokers and real estate agents to, when you're starting this process, and if your clients are getting into, looking to buy in the home and get into escrow, to contact the insurance, your current insurance company or a broker immediately. When you mentioned the FAIR plan earlier in the segment, we're having to go to FAIR plan, and
explain the FAIR plan, because I talk about it as if people know what that is.
It's California FAIR plan. It's a government run program that is technically has when you have a FAIR plan policy, it's technically for fire only. Doesn't have any other coverage other than fire. Now it does qualify, to satisfy the loan process, so you can close with the FAIR plan, but we have to write what they call a difference in conditions policy, a DIC policy, on top of that to cover all the gaps that the FAIR plan has. So we have a California FAIR plan policy and a DIC. And that, they'll give you extra coverage for personal property, liability, because the FAIR plan does not have liability on their policy, and with loss of use. So it does cover, like I said, all the gaps that the FAIR plan, has.
So there's fire is obviously an issue, but I don't know. You tell me, you're the expert. I've always felt or believed that the bigger concern that I would have is where there's more likelihood of a water hazard in my house or a water issue than a fire. Is that true?
Yes. The water, back when we were in the drought, how long ago was that? Maybe
I don't know. The governor I just heard this morning said we still need to save water.
Well, when there was a drought years ago, we didn't have rain.
Right.
Water losses were up at an all-time high. That was, now when you're talking water losses, you're talking water losses within the house, pipe breaking, toilet overflowing, so that's covered under a normal homeowner's policy. Is the water outside in that is, for flood. And that's, when you need a flood policy to cover that. But
the water inside the house, is that covered by the FAIR plan?
Well, technically you'd have to have no, it's not. And that's why you have to have the difference in conditions.
So the difference in condition covers the water.
Yes.
So that's going to be the one that's really, so you're still going to be paying, you're not getting much of a discount by taking fire off.
No, not at all. Not at all. And the other thing with the California FAIR plan is we're submitting, we're doing submissions to them. It's taken 30 plus days just to get a quote back.
30 days for a quote.
In fact, one we got back about a week ago was 45 days. So that just goes to show you the amount of FAIR plan policies that are being, quoted and submitted. They're technically, they're overloaded. And to get a FAIR plan quote back in 30 days is ludicrous. And it's just, so that's causing us to have to go, if it's an earlier closing than 30 days, I can't guarantee. Sometimes they come back in 10 days, some 15, some 30. It's just all over the board.
So let me ask you this, is the price of that insurance consumer dependent or is it property dependent?
It's property.
So if I'm listing my house, can I go and get a quote on the FAIR plan? And would that be, can the buyer assume that quote?
Technically, yes. Yes, they can. Yes.
So that's kind of a strategy that a listing agent might want to do, is get, talk to you, call you and say, hey, Taylor, I'm selling my house. Is there issues with coverage?
Yes. And that's what I'm trying to tell agents, if your client is serious about something, call me, because if there's, we're can turn quotes around in non-brush areas pretty quick, but when it's a brush risk, it could take 2 weeks just to get quotes back.
And I'm sure that everybody understands that that's just the way it is, and the government just moves at their own pace, and they don't blame you at all.
Correct. And you know, with the pool of carriers, you know, of being a broker, I have a pool of carriers that I represent, and just like State Farm and some of the other companies, some of our carriers have pulled out of California. So my big pool has shrunk considerably. So when I have, you know, a referral come in and we're going to market, I don't have that 10, 12 company market that I'm used to. It's maybe down to 2 or 3.
That's kind of
it's
when you take competition out, you can count on prices going up.
Correct.
When we come back, I want to chat with you because in the past you've had some great insight for us on, you know, strategies to mitigate water issues.
Correct.
So maybe you can share some of those when we come back. Continue our conversation. Taylor Wilson, Williams Insurance, chatting about home insurance today. We've talked recently about life insurance, but now we're talking about the home insurance. And I can tell you firsthand, and I've got friends that have had the biggest problem. I've never, thankfully, I do have a friend that had their house burned down completely, but I've never had that myself. I've had the water issues. Hi, good morning, Alex. Glad to have you with us. I see you're here. And Taylor's come up with some really good strategies because you, historically, I don't know if you're still in that space, but historically you dealt with a lot of higher end properties.
Correct. Yep. Yes.
And, you know, if you have the supply line to the toilet in a high end property is probably the same as a supply line to the toilet in a mobile home.
Correct.
And either way, when they burst, they cause a lot of problems.
That's correct.
In the mobile home, not quite as expensive to repair. In some of your properties, it's more than the cost of the mobile home.
It's a $5 part.
$5 part and a massive problem.
$100,000 loss.
So what are some of the things, some of the strategies that you're sharing with clients about, you know, avoiding this problem?
Well, a lot of companies right now, depending on the value of the home, in order to bind coverage, some companies are requiring the water flow alarm.
Okay.
And the water flow alarm is a device that's on that gets put on the water line at your house. And if there is a surge, you know, if a pipe breaks or there's a surge of water, the water just shuts off, you know. And so that is helping mitigate a lot of water losses. In fact, with Chubb and Cincinnati and Pure, on most of their homes that we have been binding the last year, they are requiring that as a deal that they have to put that on their home. Before.
Is that an expensive?
I had to do it on my home out the door. It was about right under $1,500 with the part and then the labor. And it doesn't matter the size of the house. You know, water line's your water line. So whether you have a 1,500 square foot home or a 10,000 square foot home, it's, you know, technically the same price.
Well, the price is the same, but there is that zip code pricing that sometimes gets involved.
Correct. But you do get, you know, it's like putting an alarm on a home or something like that. You do get you get a credit, you know, for having that. So, and then, you know, they have the same thing for the gas line. They have a earthquake seismic shutoff valve. So if there's an earthquake and the gas line breaks, then the gas shuts off and won't cause a fire.
Wow.
So you're looking, so you have a couple things that you can do. So if you have that water flow alarm, you technically won't have another water loss anywhere in the house.
Well, why would that be?
Because you know, if their pipe breaks or that toilet leaks, it shuts the water off.
But it had to have the pipe already had to have broken.
Yes.
Before that happens. So you're still going to have something, but mainly you're going to have a flow of water, but you're not going to have, it's going to shut off at some point because once it reads that sudden flow, it'll shut off. So it may be that it's not worth it's not worth it to file a claim at that point. You may still have a small damage.
You
might
could have
a carpet or something.
Exactly. You know, and you might have to, you know, some flooring, but you know, that 1,000 or 2,000 or under 5,000 loss.
It's not going to be the $50,000 kitchen or
exactly, or $100,000, or if it's upstairs
right
and the water's going down the toilet, you know, the second floor falls down into the first floor, you know, that's seen that happen. So yeah, you're technically taking all that away. And
now the one that you talked about with the gas, does that only work in an earthquake?
Well, technically that's what they called for, but for some reason, if the gas line does break for another reason, it will shut off as well.
Okay, because actually, when we had a water leak, we were stuck at a hotel for about 3 months while they were repairing our house, supposedly.
Correct.
And so you end up at certain properties, half the people there, maybe more, are all there because the insurance company put them up.
Correct.
And we had somebody that actually they nicked their gas line when they put their trash cans away.
Mm-hmm.
And
So something like that, yes, that would cause that to shut the gas off.
okay,
And so mainly when you have
their house burned down because of it. So that's,
correct, yeah. And so technically, when you have an earthquake, and the gas line, does break, then it just stops, from the house burning down. Now you only have a issue with the gas line instead of now with the house on fire and dealing with claims. So you're just trying these two things are just something to, help, you out. Yes, it does cost money, but it will pay for itself in the long run, because you are avoiding two major issues with gas and water.
Now, what happens in the instance with the flow alarm? So there are some, and I'm assuming some of the properties that you insure,
Yes,
as well as some multifamily, they're required to have sprinklers.
correct.
Does the flow alarm bypass that?
Exactly. The sprinklers are on a whole different. That's a whole different deal. So if there is a fire, the water won't shut off for the sprinklers. That's on a separate line.
Okay.
Yeah.
I was curious because you can have a massive surge of water.
That's actually a really good question. So yes, that's on a whole different separate deal.
So it can save somebody a whole lot.
Correct.
Okay, so there's a few different options for you right there in dealing with water, because again, water to me, I don't know, you're the expert. Are there more claims for fire or water?
Water by far.
Now let's take it the next step, because in certain instances I've seen where if there's too many water damages, then you just can't even get insurance.
Yes. I mean, we have companies. In fact, we had one come in last week, that 3 water losses, we were able to find them coverage. Now the premium's not
Not
nice.
a pretty premium.
It's not a pretty premium, but they're able to, they were getting non-renewed because they had 3 losses with their current company. And they did repipe because, some people that have 1 or 2 water losses, then the third water loss, or even after the second water loss, they do, repipe. So someone that does repipe the home, that does take into consideration talking to an underwriter that's like a remediation of a loss. So they will take that into consideration, because if you repipe, then any of those pipes that like slab leaks, it's gone. You don't have to worry about it anymore. So repiping after a couple water losses will help your cause to get decent insurance.
So as a strategy, you may want to repipe proactively.
Exactly.
If you have a water loss or 2, you may want to talk about repiping. And then even if you have, now will they go back on that policy that you had that got ugly in pricing?
Now, so they will. You still technically, if in this case you have 3 water losses, but they're gonna underwrite it different because you took care of the problem. But the water losses are still there. They're still, it's like your driving record. Your tickets are still there.
Okay.
But they're saying, oh, he spent, I mean, I had to repipe. It was $10,000, 5 years ago. So, it's an expense, but the insurance company said, okay, they took care of the issue. So we'll be a little bit more lenient on offering coverage.
So number one, you'll get coverage or potentially, and you might get your money back after 3, 4, 5 years.
Exactly. It's going to pay for, like I said, it's the initial upfront kind of, oh man, $1,500 for the water flow alarm, $2,000 for the earthquake seismic shutoff valve, $10,000 to repipe. But knowing that the mind of ease that you're not going to have any more of those issues, it's
might be worth it.
Yep.
And so you got the benefits for your stress level. And the benefit of the insurance might be on your pocketbook as well. Continuing our conversation, Taylor Wilson, Williams Insurance. We're chatting about home insurance today. Covered a lot of ground. If you can't get insurance, call Taylor. I said it's like we got to go like go see Cal, right? If you can't get home insurance, call Taylor. If you have too many water leaks, call Taylor. Maybe if you want some easy ones, if you know you've got a nice simple policy, call Taylor.
You should, yeah. Should hire you.
Okay, so the condos, how are those fitting in with all this whole mess of people getting home insurance?
So the condo market is a little bit different than, buying a home. I gave you two examples earlier, Newport Coast, Anaheim Hills had some condos, referrals come in. The brush, and those are two, Anaheim Hills, Newport Coast, two high brush zones. And the condos are being accepted because they're, obviously it's, the walls in, they're thinking, the insurance company's thinking
What is walls in? I'm a simple guy, Taylor.
I'm sorry, the walls in so a condo policy, you have for the insurance on a condo, you have the master policy, which is covered by the HOA. And what they call walls in on a condo is you're responsible for everything inside the condo, the betterments and improvements for the flooring, the kitchens, any upgrades, and then your personal property. So when you're going to buy a condo, that's what the kind of policy you're buying. You're not buying, you're not paying for the structure coverage. You're paying just for walls in, for kind of like a renter's policy.
Okay.
You're just, for your personal property.
So I heard a new one just recently, and it would be an area that you cover. I've never heard of this before, but it was in Coto de Caza.
Yes.
And one of the condo groupings in there, I don't know if it's all under one policy or one plan or whatever, but the condo that we were talking with, they actually switched it about a year ago that the homeowners are responsible for their own fire and all their coverage. The association doesn't pay for any insurance for them now.
Yes. And if that is the case, I have to get, some sort of documentation from whoever that is that stating that they need coverage for that. Because yes, we have written condos in the past where it's like kind of like a home, like a single family dwelling where they have coverage for the structure and their personal property. So yes, that is common these days because I think you mentioned earlier about some of these HOAs don't have a policy.
They can't afford it.
Can't afford it, so.
Well, this particular one, it was in Coto, and actually, believe it or not, well, you believe it because you're in the business. I was surprised. Mm-hmm. So they ended up having to go with the two policies that you mentioned.
Correct.
They had to go with a fair plan for fire, and then go with the difference in conditions for the content.
Well, and then it also, it depends, if some of these condos, maybe they have one wall attached, it's just a condo with one wall and there's 2 units, but some of them, when you have 5 units attached and you're trying to get, these owners to get a homeowner's policy can get interesting, especially if you're the guy in the middle. Exactly. So you might have 5 units and maybe only 2 of them have full coverage. And the place burns down, and that just gets into and then you like, who's rebuilding? Right. So, and as a lender, the lenders are looking at it and saying, okay, what's protecting our collateral? Exactly. So that's when we have to get something written from the lender stating, hey, we need, we call it an HO3, which is for a single family dwelling, a policy. So we can do that all day long. It's a different way to do it. But if they're requesting it and it's legit, then yeah, we'll do it. It's amazing how it's every industry has to get creative certain times. Oh, I mean, it's like I tell, there's some people in my office, I go, you have to technically work these days. Oh, surprise. I mean, how you really dealing with that? So yeah, and get creative. Surprise. And get creative on what you want to do because, we get leads, multiple leads a day, all day long, 7 days a week. And some of these brokers would say, oh, if it doesn't fit into this little box, then we can't write it. But I tell our team, let's find a way. We can get it done. We're a broker. So might have to, look into some different avenues, but there's always a solution. Might get embarrassing if somebody calls your office and one of the guys doesn't want to work that hard. And then they call the next guy on the yellow page. Yes, I'm old. I know the yellow pages. You Google another broker and they get it done. Well, what is that going to look like next time when it comes back to you? And, make sure that we have to cover all our resources and actually get on the phone, talk to the underwriters, paint the picture, tell the story. and, let them know, why they should write the risk. And a lot of people don't do that. It's about picking up the phone these days and just, and talking to people, talking to underwriters, and, and getting things done. That's why how we separate ourselves, from other brokers, where, we can get stuff done where other people can't.
Well, because you get the resources, you got the experience, you've got the time, the dedication, and the desire.
Correct.
Other than that, nothing. Got it all going.
I got
for you.
nothing else to offer.
If you want to chat with Taylor Wilson, give me a call at 800-306-1990, 800-306-1990. I'd be happy to put you in touch.